Glad to have you here on Money Matters. I am Folashade Ogrinde. With the announcement of Nigeria's slide into a recession, all attention was turned to the Monetary Policy Committee (MPC) meeting of the Central Bank of Nigeria held quarterly to review domestic microeconomic events, including the implementation of the fiscal, monetary and exchange rate policy. The governor of the Central Bank of Nigeria, who chairs the committee, said the committee voted unanimously to retain the parameters. The Monetary Policy Committee retained the policy rate at 11.5%. The liquidity ratio and cash reserve ratio, CRR, were also retained at 30% and 27.5% respectively. This report tells us more. With Nigeria slipping into recession just days before and inflation trending upwards, all eyes were on the Monetary Policy Committee to see what its response would be. And that response came shortly after the two-day meeting.
MPC voted 1. To retain MPR at 11.5%, 2. Retain a symmetric corridor of minus 100 and plus 100 and minus 700 basis points around the MPR, and 3. Retain CRR at 27.5%, and 4. Retain the liquidity ratio at 30%.
The decision is not much of a surprise, given that the committee reduced the monetary policy rate at its last meeting in September and will therefore want to observe things for now to see how impactful the court is.
On balance, MPC was of the view that although all three options offer some benefits to the economy, the hold option was desirable at this meeting. Based on these factors, members voted in line with the most pressing need towards reversing the recession and achieving medium-term macroeconomic stability.
As the country grapples with the reality of the economic recession, the committee sounded optimistic the recession will not last for long.
Based on data available to the MPC from the CBN, we are somewhat cautiously optimistic that indeed, if we continue doing what we're doing and do more, that there's a likelihood that we will see some little positive output numbers in the fourth quarter of 2020. But I can say with some level of certainty as well that we are so certain that during the first quarter of 2021, we will exit the recession. Why? As a result of all the actions taken by the monetary and fiscal authorities, NBS National Bureau of Statistics numbers shows that 18 sectors during the third quarter recorded growth relative to 13 sectors during the second quarter. And this growth were recorded mainly from the agricultural sector, industry, manufacturing. Indeed, we saw even services dropping somewhat slightly. But agriculture coming on very strongly also means that what we can achieve from whatever we're doing to stimulate agriculture and manufacturing will create jobs for our people and also stimulate spending, will increase output, and ultimately lead to a moderation in the level of inflation in our country.
With the local currency coming under severe pressure in the past weeks, the central bank governor said the pressure was the result of speculators and that it is wrong for people to tie the fate of the naira to the parallel market.
Parallel market, as far as we know it and the data that we have, is a shallow market in Nigeria with no more than 5% of market share. Parallel market, and quote me, is a tainted market in Nigeria, where people who desire to deal in illegal foreign exchange transactions, including sourcing of FX cash for purposes of offering bribes, corruption, that is where they deal. And that is where people who are supposed to understand the implication of this on the economic activity in our country begin to go to television and begin to say that our exchange rate is 480. This is very unfortunate that this is the way those who are supposed to know try to bend numbers in this country.
Nigeria's economy is facing a difficult period, largely caused by the adverse effect of the COVID-19 pandemic and the collapse in oil prices. The managers of the economy have a tough task to get Africa's largest oil producer out of the current recession as quickly as possible. joined now by the Director General of Lagos Chamber of Commerce and Industry, Mr. Muda Yusuf. Thank you for joining us on Money Matters. Now, what do you make of the committee's policy to retain the monetary policy rate at 11.5%?
The outcome of the Monetary Policy Committee meeting did not come as a surprise, actually. Many of us were expecting that all the rates would be held as they were. In other words, the status quo being maintained. Because if we look at all the monetary policy actions, we can say that the monetary authorities have practically exhausted all what exactly the monetary policy instruments can do as far as stimulating the economy is concerned. We have seen what is happening to Naira liquidity. We have seen what is happening to lending rates. It has crashed. We can see that a lot is now happening in the equities market because of the crash in money market interest rates. We can see that quite a number of companies are now floating corporate bonds. You can see that commercial papers are being issued at single-digit interest rates. So these are very interesting developments, especially for the real sector of the economy. Although it may not be good news for those who are trading in financial instruments like treasury bills or federal government bonds, because the rates in those areas have crashed significantly. The same thing with fixed deposits. The rates in all those instruments are even negative in real terms as we speak. But for the real economy, I think it is good news for the real economy. And if we get it right, it's a very great opportunity for us to properly diversify the economy and move resources away from investing in financial instruments into investing in the real economy.
Now let's talk about the reaction of the CBN Governor, Godwin Emefiele, towards the question of the parallel market being the determiner of the value of the Naira. And do you agree with his response when he said the parallel market is tainted with corrupt practices and should not be used as a determiner of the value of the Naira?
No, I don't agree with that position. The parallel market rate is an indication of the scarcity that we have in the system. It's an indication that many of the players in the economy cannot access foreign exchange through all these other windows, either the NAFEX window, the official window, and whatever other windows exist. So it's a manifestation of the scarcity. It's a reflection of the liquidity crisis that you have in the foreign exchange market. That is why you see that even prices generally even reflect what is happening in the parallel market rates. You can see the rate at which prices have changed in the economy over the last few weeks as a result of developments in the parallel market rate. So it's not a market you can ignore. It's a market from which you can, take a cue in terms of the indications and the signals that it gives.
And now, do you think the Central Bank of Nigeria has exhausted its monetary policy options?
Well, so far, I would say that all the key monetary policy options have been practically exhausted, and you can see the results. Because the whole objective is to drive down interest rates in order to stimulate the economy, and interest rates have come down. Prime lending rate now is getting gradually close to single digits. I've seen investors who are saying that the rates they are getting from the commercial banks now are even much better than the rates they get from the intervention funds, are better than the rates they are getting from BOI. So this is very interesting. So it means that even the commercial banks now are now getting more properly aligned with the real sector of the economy. So I think the objective has been achieved. But what we are not still comfortable with is the foreign exchange market. I'm not sure the central bank has done enough to ensure that you have a foreign exchange market that inspires confidence, that can attract a lot more foreign exchange in the economy, and that can also provide some certainty for investors. Because as we speak, many investors are in the dark as to what exactly is happening in the foreign exchange market. Many of them cannot access foreign exchange for raw materials, for equipment, and they are not sure when they will be able to access it, at what rate they will be able to access it. So that is the challenge I think the CBN need to fix, and fix very quickly.
Now, when the CBN Governor, Godwin Emefiele, was speaking yesterday, he made mention of the fact that part of the reasons for the policy is to ensure that recession is eased. Now, do you think, or in your expert opinion, do you think these policies by the federal government, the CBN, and other agencies, do you think these policies would, create an ease in the recession, looking at the first quarter of 2021?
No, the policies are in the right direction, because the focus of policy is now on stimulating growth, on stimulating investment. And if you want to stimulate investment, one of the things you do is to ensure that there is a lower interest rate. So if lower interest rates is what we are having, I think it's good for investment. It's good for all the effort that government is making to be able to reverse what we have now with the recession. So I think the steps are the things are in the right direction. But these policies need to be complemented with other policies, just as the CBN governor said. We need to complement it with the fiscal policies. We need to address the issue of the structural issues. We need to address the issue at the ports. We also need to address the issue of logistics and all of that. So there has to be complementary policies on the fiscal side to support what is happening on the monetary side. And just as I said, we need to address the issue of the foreign exchange market. We need to bring some normalcy into that market. We need to get rid of all the parasites in the market. We need to, as much as possible, unify the rates, so that all these parasites who are just there to take advantage of the premium and the rents, we will be able to get rid of them.
Well, thank you, Mr. Muda Yusuf, for your contributions. I mean, you made some very valid points. Thank you for coming on Morning Matters.
Thank you very much. It's a pleasure.
And that was Muda Yusuf, Director General of the Lagos Chamber of Commerce and Industry. We'll take a short break here, and when we return, we'll turn our attention to Nigeria's recession and its ripple effect on the economy. Do stay with us.
Corruption not in my country.
Hello, Alahaji. Right now I'm in Abuja. No. Hello? Adamu. Right now I'm in Kano. Yes. When I get back, I will just call you. Look, what is wrong with you? I'm talking on the phone and you are gesticulating and doing. What's wrong with you?
Daddy, where exactly are we as we speak?
Are you alright? This is Lagos.
Well, you just lied to someone that we're in Abuja.
Keep quiet there. Who told you can tell an elderly person is lying?
Daddy, you just lied. And by lying, you're raising corrupt children for the future of Nigeria. That is corruption, not in my country.
Corruption not in my country.
Welcome back. Now, just when Nigerians are trying to understand and make the best out of the rise in food inflation in the country, reports of a recession by the Nigeria Bureau of Statistics took a hit. Now, according to the NBS, Nigeria's gross domestic product, GDP, in real terms declined by minus 3.62% year-on-year in third quarter of 2020, thereby making a full-blown recession and second consecutive contraction from minus 6.10% recorded in the previous quarter, that is the second quarter of 2020. Now, just as expected, the oil sector was also hit hard. Now, all of these have naturally drawn reactions from the government, finance experts, economy watchers, and the average Nigerian. But most importantly, these figures have raised questions begging to be answered. I'm now joined by Mr. Abiodun Kerikpe, the Managing Director of AfriInvest Research. Welcome to the program. Now, as we've seen in many of our interactions with financial opinion leaders, the announcement of a recession did not come as a surprise. As a matter of fact, Minister of Finance Zainab Ahmed had predicted in May that Nigeria could slide into recession at any moment. Now, tell us, what do you make of Nigeria's negative economic growth, which translated to recession?
Like you rightly said, the recession is not coming as a surprise, given all of the negative backdrop we've seen and we've had, given the impact of the COVID-19, and now that's has impacted on crude oil prices, impacted on trade, demand, and if you look at the key services, the key sectors in the economy, from telecoms to agriculture to services to trade. If you take off telecoms, take off services, you will see that most of those key sectors are actually down, and that basically was what was responsible for the drag in the overall economy in terms of GDP output. Again, this is not just about COVID-19 alone. It impact lower crude oil prices and lower crude oil production or sales, given that we also have the OPEC crude production cuts that we're also dealing with. We're also seeing a closure of the Nigerian land borders relative to some of our trade partners, which also has a major impact on trade. And all of this put together is dragging down the overall economy. Again, we will see that in terms of agriculture, we'll see that we're still dealing with some level of insecurity. We're still dealing with some very poor infrastructure in terms of road network, which clearly impacts on agriculture production, crop production, impacts on transportation and distribution. And as a result of that, all of this is just coming into reality for us to see that these numbers. But again, if we look at the Q3 GDP number, a contraction of 3.6%, we compare with what we saw in Q2, 6.1%, in Q2 negative contraction, we can see a bit of a moderation. So one can clearly say that the negative GDP number from Nigeria possibly has bottomed out with this Q3 number. So going into Q4, you probably begin to expect to see a sort of subtle recovery in the number, especially as some of those sectors have taken the biggest impact from the lockdown on economic activity and the destruction, even if you bring into context the NSAS protest and how that also disrupted the fragile recovery that we initially were seeing. All of that has impacted on economy. So you expect to see a gradual recovery as we go into Q4. But again, the pace of that recovery is going to be very slow and very painful, given that there is not so much that the government is able to do, given we're still heavily reliant on crude oil, on what happens in the crude oil market. And
now, I'm sorry to interrupt you here, but would still, of course, go back to what the government can do. But I need to ask this question. In 2016, Nigeria experienced a recession, which was largely attributed to huge losses of crude oil production. Now, in 2020, the recession has been blamed on falling oil prices and economic effects of COVID-19. Now the question is, what policies can the government implement in order to guarantee sustainable economic growth that would not be largely dependent on oil prices?
Sorry, I think I lost you a bit from the point you talked about 2020 GDP in terms of why.
Okay, basically what I asked was that in 2016, Nigeria experienced a certain recession, which was largely attributed to huge losses of crude oil production. In 2020, the recession has been blamed on fall in oil prices and economic effects of COVID-19. Now, basically what I want to find out is what policies can the government implement in order to guarantee sustainable economic growth that would not be largely dependent on oil prices?
Oh, interesting. So, I mean, given where we are now, right, government need to sort of begin to review some of their policies around trade, all of the land border closure that we're seeing, all of the policies around restriction to access the foreign exchange market for exporters and importers, for them to be able to import key raw material items that are needed to boost production. Government needs to revisit some of these policies and sort of re-engineer those policies to become favorable to attract production, to attract capacity. Again, we're dealing with weak consumer purchasing power or falling consumer capacity in terms of demand. Government needs to see that the level of intervention and completely cooperatives, but more like monetary intervention, which the CBN calls developmental finance. They need to sort of expand the scope of that intervention and ensure that it gets to the right people who really needs it. Small businesses are given the necessary support in terms of funding, in terms of favorable policy. Again, looking at taxation, looking at all what we're seeing in terms of the review of energy prices. This has a way also of impacting on the consumer spending capacity. Some of those things need to be looked into and sort of reviewed to have a balance, because of course it is important that the economy is sort of market driven and not just about subsidies left and right, but there has to be a bit of a balance so that the necessary impetus we need to drive growth, we can sort of see it. So top of my mind, I think government needs to revisit the policies around trade, to sort of restructure these policies, open up the borders and allow free movement of goods and services as the case is. And then in terms of foreign exchange, they also need to revisit the policies around foreign exchange, such that they can open up the foreign exchange market for exporters and importers to be able to freely transact at a market, at a price that would be encouraging and favorable to both parties, right? And then lastly, to boost demand, some of the interventions that have been done and announced, they need to channel those interventions to the right sources that really need them, to the sectors that really need them, to be able to see those sectors impact more on growth. We've noticed that looking at the telecom sector, looking at the financial services sector, those sectors have been quite resilient amidst all of the pandemic and the fall in crude oil prices. But agriculture, growing
now,
at about
I'm very sorry
1.39%,
to interrupt you at this point. It's quite interesting. You spoke about some of the policies, and especially you made reference to some of the policies of the Central Bank of Nigeria. But in 2019, Governor of the Central Bank of Nigeria, that's Godwin Emefiele, said Nigeria's recovery was driven largely by improved non-oil activities, especially the agricultural sector, which was reinforced by the pickup in the oil sector as oil prices rallied in 2017. Now, do you see the same situation playing out in 2020 and 2021, knowing fully well that Nigeria's economy is solely relies or majorly relies on oil prices?
I don't think that's going to repeat itself, right? We understand that the CBN has been providing a lot of support to the agriculture sector. I don't have the numbers, but some tangible billions of naira has been used to support farmers in this sector in terms of stabilization funds. Despite all of that intervention, the fact that it closed the border to encourage agriculture and all of that, agricultural growth and contribution in terms of growth, agriculture is growing at about 1.39% Q3 2020. In terms of contribution, the contribution is not so significant, or we've not seen a significant increase in its contribution. So despite all of that effort that's been put into the sector, we're still not seeing a major traction from the sector. So meaning the recovery we're looking at, the recovery we're expecting, agriculture may not be the sector that is going to deliver or bring or give us that recovery. So I should think some of those sectors that have been quite resilient is what we should put an eye on as the key sectors that are likely to support or drive the expected recovery in the economy from Q4 into 2021.
All right. Thank you very much, Mr. Abiodun Kerikwe, for joining us on Money Matters, and thank you very much for sharing your thoughts on this matter.
Thank you. Thank you for having me.
That was Mr. Abiodun Kerikwe, Managing Director, Afrinvest Research. But that's how much we can take on the episode this week. Thank you very much for joining us. Please join us again next time. I am Folashade Ogrinde.